You have heard that accounting is the language of the business, and it's true. But unfortunately, for a lot of small business owners or self-employed individual, accounting is the last thing they want to deal with, especially bookkeeping, which is a very small portion of accounting. So in this video, my goal is to walk you through an accounting cycle so that you can learn not only the concepts around accounting, but especially how in practice accounting actually is done. And if you're one of the person who really enjoys doing the work themselves, this video is right for you. But if your accounting needs or your business is a little bit advanced and you are just starting to learn accounting, this might not be the best approach to doing your business. You might need to hire a professional to help you with your accounting needs. So to begin, I am going to share my screen so that I can show you what accounting in practice actually looks like. So what we are going to do is to use the example of a startup. So let's imagine you decided to start a food truck business. And with the food truck business, you want to invest a little bit of your own capital as well as raise a little bit of debt. So when you start your business, from the accounting perspective, the goal is to capture every piece of information that at the end of the month or week or quarter, especially year, you want to have accurate financial information to file your tax returns or to raise capital by showing to investors or lenders the financial statements of your business. So when you start your business, your balance sheet is completely empty. So you'll see lots of zero there, right? As well as your income statement. So we saw your balance sheet there as well as your income statement. You have zero revenue as well as zero expenses. So I kind of organized this video recording in a way that usually I help my clients to have the information as well as to use it for tax preparation and tax strategy and tax planning as well. So let's go to the beginning and look into the initial concepts of accounting, right? So you've probably heard this idea that in accounting everything have to balance, right? That's why we have the balance sheet. Your assets have to equal your liability plus your own capital contribution to the business. So the same way we organize our chart of accounts, which is basically all the accounts we use in the business for the purpose of financial reporting, bookkeeping, and all the other accounting needs. So you have all the assets, liabilities, income, accounts of revenue, cost of goods sold, expenses, other income, and other expenses. So let's say hypothetically today is June 16th. So on June 16th, excuse me, okay, let's do here. On June 16th, 2021, you decided to start your business by contributing 100K for the food truck business. Okay, so we're gonna see an increase, right? Contribution by owner. So that's our legend description, right? You contributed 100,000. So cash increase. So you'll see this column balance is just to show me whether or not the accounts are balancing or not balancing. So in accounting, we have this idea of double entry, which means a debit have to equal a credit and so forth, right? Or multiple debits have to equal multiple credits or one credit and so forth. So we know here our counter account will be your owner contribution. So we're looking into the owner contribution, right? So here we have owner contribution. We'll keep the same legend here, and that's gonna be a negative 100. So here our column will look exactly 0, right? So the notes we can add here, owner contributed capital to start the business, right? So when we go look into our balance sheet, we will see that the balance sheet indeed balances. We have 100K into cash and 100K into owner's capital. Exactly, total assets equal total liability and owner's capital. But the income statement, it's still empty because we didn't sell anything and we didn't expend any money. We didn't spend any money in operations of our business. Okay, so let's say that you created a really awesome business plan, still in the same around the same date, and with that business plan you were able to raise $50,000 in debt. Okay, so again our cash balance is gonna increase. So we have loan from bank A in the amount of 50K, of course, and this amount is increasing our cash balance, but also we have to equally increase, right, our loan payable, right? So loan payable is part of liabilities or obligations the business have to pay, and we're gonna just make the same note for the same here, and we're going to put it in negative balance, right? Okay, I entered something correctly here. So as we can see, when we go to our balance sheet, we should have debit equal credit. So let me enter this change sign here, and this should provide us our total asset 150, cash increased, and liabilities and owner's equity increased. So we can see our long-term debt increased, our owner capital increased. So from here you can see how the accounting is functioning, right? You have your asset, you have your liabilities and owner's capital. So let's use another example. After several days, you met with the accountants and lawyers, and you pay them some service fee. So let's use an example here. So okay, something is not right. Okay, so on the 17th, you have spent a little bit of money with so we're gonna name these professional service fees, right? So meeting with accountants, lawyers, and consultant. So let's say you spent about $5,000 with them, right? So you pay these out of your cash balance, right? So you spent about $5,000, and the same transaction again, the double entry, and we're gonna debit this into professional expenses, right? Professional fees. So from here we enter the same balance but as positive. That's just the way that I set up my system, and it works. So when we go to our balance, let's actually go first to our income statement. In our income statement, what we see now is we have a $5,000 in our professional expense category, which automatically results into net operating loss because we don't have any revenues yet. And this net loss is going to go into our retained earnings, and therefore it's going to reduce our owner's capital, as well as in the total asset side. Since we spent 5,000, it's gonna be reduced from cash. So again, the balance sheet is balancing. That's a good sign, right? So as we move forward, right, so let's say you had your first client on the 19th. You have your first client that booked your business for some food delivery and food provision, right? So sell of food for an event, right? So let's say this client is going to be paying you $10,000 for this event, right? So you want to enter it. Since you received the cash but you haven't provided the service yet, it's not really a revenue, so it's a liability from the accounting standpoint. So that's going to be called unearned revenues, right? So I am going to look for the unearned revenues account here and book that 10,000 US dollars. So client prepaid for event. And when we go to our balance sheet, we see that this is going to increase our cash position, but also is going to increase our liabilities here. This doesn't impact our revenues yet because we actually didn't book any revenues, right? So as you can see here, revenue is 0. So we can continue showing several more examples, but the bottom line that I wanted to share with you here, just for the sake of making this video training short, is that when you have a good accounting system, it allows you to make better and informed decisions about your business. You actually know how your business is doing, how it's performing, whether you owe or not, whether you will have enough cash to cover your operating expense. And at the end of the year, when you need to prepare your taxes in the next tax season, you're not going to have a lot of headache to try to put a pile of information together in a short amount of time. What usually I see, people lose a lot of deductions because throughout the year they were messy, they didn't keep their books in order, and they misplaced some invoices or some receipts they paid for service or even for good they consumed for their business. So at the end of the day, what I'm really getting into is, as a business owner, a self-employed, even if you're a gig worker, you have to get organized. And the first place to start getting organized is with your accounting. If you don't understand accounting and you want help with your accounting needs, call us. We're here to help you take care of your accounting needs while you focus in running your business. But if you want to do it yourself and just need someone to train you how to do your accounting correctly, feel free to reach us out as well. We will help you. We'll train you in a way that will allow you to actually run your business more efficient and effectively. So if you enjoy this video and the content and you'd like us to do to do more this type of video, maybe to focus in a specific industry where you are, would be more than happy to do so and help you succeed with your business. I hope this was helpful to you. Please subscribe and share with the people who could benefit from the content of our channel, and I look forward to connecting with you.